Hello and welcome to Impact the Borough, a podcast from the Greensboro Chamber of Commerce. I'm Brent Christensen, President and CEO of the Greensboro Chamber of Commerce. Each week, a Chamber staff member will sit down with a guest to discuss what we're doing to start and grow businesses, create quality jobs, develop our workforce, and tell the inspiring story of Greensboro to the world. This podcast is brought to you by Truliant Federal Credit Union, a modern, mission-driven financial institution focused on the needs of its members, the businesses it serves, and our community. With 5 locations in Guilford County, including a dedicated commercial lending office at Friendly Center and a highly rated mobile banking app, Truliant makes it their business to help you grow yours. Visit Truliant.org for more information.
So thank you, everybody, for joining us today on Impact the Borough. I'm Lou Ann Flanders-Steck, the Executive Vice President of Entrepreneurship for the Greensboro Chamber of Commerce and the Fund Executive for First Launch Capital Fund. First Launch Capital Fund began making investments last year in tech and tech-enabled companies located in or willing to relocate to the 12-county Piedmont Triad region of North Carolina. We're based in Greensboro, but invest in companies across the region. Joining me today are Bill Souls and Rob Arnold. So thank you both for being with me. I'm going to let each of them introduce themselves. So Bill, if you'd like to introduce yourself to the audience, please.
Sure, Luann. Thank you for having me. I am, for most of my career, was an investment banker doing merger and acquisition work for primarily lower middle market and middle market companies. And I worked in both the corporate world as well as I started a boutique investment bank in Greensboro with a couple of partners. And we sold that company about a decade ago, and I have been a private investor ever since.
So thank you, Bill. And Rob, would you introduce yourself to our audience, please?
Yeah, I'm Rob Arnold. I'm the founder and CEO of ThreatSketch. I am basically a recovering IT consultant. I spent about 15 years working in the technology arena, mostly on new inventive things. In fact, business intelligence is a kind of a big thing right now, or big data. We actually helped one of the local Fortune 500 companies set up one of the first business intelligence programs. I did a lot of ethical hacking along the way throughout my career, helping people hack into routers that they'd lost the password to, or other systems that they couldn't access anymore, and eventually decided that cybersecurity was something that I wanted to pursue, and went back to graduate school and got a master's certificate in information assurance. And it was so early in the field that really cybersecurity as a term hadn't even come out yet.
So you've worked with large corporations and organizations, you've started a company, you've worked for smaller businesses, and you've raised 2 daughters, of which you are very proud and you should be. So tell me a bit more about your background and kind of what prompted you to start ThreatSketch 5 years ago.
Sure. So as far as my background goes, I've been infatuated with technology since a very, very early age. In the mid 80s, I got my first computer. It was a Christmas gift to me when I was a teenager, and I actually taught myself how to program while I was living basically in a small rural town in Virginia, and had no mentorship or anything. Just kind of figured it out on my own. Went off to college and studied psychology, mostly because, computer science degrees were not terribly prolific at that time. But more importantly, I wanted to understand how the mind worked, because artificial intelligence was just such a really cool thing that I was enamored with. But it wasn't really ripe at the time. So I eventually found my way into other parts of the technology industry. And I did everything from software development to database development to network architecture. I was really blessed to be a part of the growing, it started out as Ciba-Geigy, ended up splitting into Novartis and Syngenta. So one of the larger companies in the region. They actually had an animal health or animal pharmaceutical division. I came in just as they went from $30 million to $300 million in revenue. That was like me being a kid in a candy store. I could get all the technology I wanted, and they let me implement just about everything. And it was a really good, really set a good foundation for my technology expertise. So I did that for a period of time as a consultant. That was, relatively easy to do as an entrepreneur, to be a consultant, because you don't have to have much more to invest other than enough to live on until you kind of get a good income stream going. But anyway, then about almost 10 years ago, I had some personal changes in my life. One of those was my ex-wife passed away, and I ended up with two girls on my own. And as I decided I was going to take a break from working from a career standpoint, focus on them, and at the same time go back to graduate school, as I mentioned. And at that point, I kind of looked at the tea leaves and saw that cybersecurity was definitely going to be a big thing, and decided to pursue that. One of the nagging questions from my IT experience was always how much do you invest in security? When I would ask executives that question, they would inevitably tell me it was all important, and it was my job to figure out which things to put security around and how much to spend. But I always felt that there was more to it than that. So in graduate school, I saw the equations for risk management, for cyber risk management in a textbook, and some light bulbs went off for me. And I realized at that point that there was a formula that you could use to solve the cybersecurity investment problem, or at least, get a good start on it. And that problem space has been one that I've worked in ever since. And it formed the basis for ThreatSketch. And in fact, the name ThreatSketch comes from the fact that, if you can do an elaborate budget by crunching all kinds of data and formulas. But the sketch part is a nod to the fact that you can also do a back of a napkin sketch of a budget. And for small and medium organizations, that's really important. The other place that's important is when you have either a portfolio scale businesses, or you have a large supply chain that's made up of small and medium sized businesses. You can't afford to go in at a high dollar price point to figure out exactly what the cybersecurity spend should be and what they should do to protect themselves. Because you're dealing with so many small organizations, you have to be very quick and efficient with figuring out that problem. And that's ultimately where ThreatSketch is going. And lastly, because I felt it was spent so much time in technology, and cybersecurity is kind of the dark side of technology, since I helped create a lot of this stuff, I feel kind of responsible for going back and fixing some of my mess with cybersecurity.
And thank you for doing that, Rob.
That's my pleasure.
So it sounds like you're a bit ahead of the time and a bit of a visionary in this space. So I'm glad that we invested in your thought process and your forward-thinking mind. So those of us that invest and those of us that have been in the entrepreneurial space for so many years, we know that there are a few real keys to success. And some of it's serendipity, some of it's just hard work, and some of it's being in the right place at the right time. But there are also things that you can do specifically as an entrepreneur to improve your chances of success, including advisory support and mentors, capital, team, and of course some other things. What do you see as your kind of key to success to date to ThreatSketch, and what would be the thing that you believe will be the most beneficial as you move forward?
Yeah, so one of the most foundational things I did was I found the local entrepreneurial community here in the Piedmont Triad, and that's something that I really didn't have when I set up my first consulting business, and frankly didn't need. As I mentioned earlier, it's relatively easy when you're setting up a consultancy to hang out your shingle. You have to have enough cash to live on until you get your revenue stream going. But there's not a really intense period of trying to figure out what your product is going to look like, who your clients are going to be, and a lot of the other things that come along with a more sophisticated business model than a straightforward consulting arrangement. And so, like I said, I found the entrepreneurial community. I got turned on to a new style of startup. It's basically the lean startup model, if you will. And from that has grown a whole number of other little sub facets of startup training. But I was lucky enough to go through with my co-founder a boot camp. It was about a 2-week program put on by the Startup Factory. And they were brought over to the area to do this boot camp for some entrepreneurs in our area, and that was super helpful. Had I not had that, I don't think we would have gotten off to a good start at all. It's always a challenge to try and balance bringing in outside capital versus using money either from your own sources or even better yet from organic revenue. We've had really good successes along the way with all of that. So that has really been key. One of the big early sources of revenue was a couple of contracts with Homeland Security to build some prototype systems for them, and that really kept us busy and allowed us to put some other ideas forward using the profits from those contracts, and that was really nice. And then when it came time to really accelerate our vision, it was going back again to the entrepreneurial community and finding the angel networks that are here, and having mentors along the way has really been key for all of that. So I think, that kind of covers it up.
Yeah, and thank you for continuing to mention the entrepreneurship community. As those of you in our community know me, that is kind of where I love to live, with the other entrepreneurial ecosystem partners in supporting organizations and entrepreneurs just like you, Rob, and so many others that we know. So you've raised capital, Rob, and I'm just curious, how did you approach that process? Is this the first time that you've raised capital? It sounds like it is. So why did you choose to go that route this time? And what made you decide to approach First Launch as part of one of your funding partners?
Yeah. So, I think every entrepreneur starts out with the hope that they can, bootstrap and self-fund, their way to success. And, if you have a simple, straightforward business model, that might work. And you have a simple, straightforward product that doesn't require a lot of development, that might work. But when you're building a platform as large and complex as what we're doing at ThreatSketch, the only way to stay ahead of the pack is to access capital that allows you to basically run faster than all the other folks that are competing in that same area. It also allows you, frankly, to make more mistakes. That may sound counterintuitive, but it's actually a very important part of the institutional learning process, is being able to try and take a prototype product to a market only to find out that maybe doesn't have a good fit. So you can pivot, try something a little bit different, or take the same product to a different market. And that through that iterative process, you figure out exactly where your optimal market fit is. Oftentimes, you only get one bite at the apple as an entrepreneur, especially if you're just trying to fund everything on your own. But thankfully, when you have good investors behind you, you can have more shots that help you make sure that you're optimized in your product market fit. And that's really the goal in terms of making sure that you're maximizing the return on investment for the investors that put their faith in you. And at the end of the day, that's kind of the end goal. And I will say too that I had the luxury of doing a few early angel investments of my own with other companies. Some went well, some didn't. That too was an important learning process. And then finally, it was bringing on good mentors to help me go through the capital raising process. Had I not had some key folks with me every step of the way, I don't think I would have actually been able to accomplish what I did.
So, Bill, as one of ThreatSketch's advisors, how did you approach this fundraising process with them? And I'm sure you're one of the folks that Rob was mentioning.
Well, there are certain things that an investor is going to look for that may not be the same thing that when you're marketing a company or doing other facets of the business that come into play. And I think that many times entrepreneurs, since it is a new experience for them to raise capital and dealing with people, it's almost like speaking a different language at times. And so you kind of need to know that language to be able to speak the investor's language. And they're questions that you're going to get probably 80% of the time that you should be ready to answer. And if you haven't been in that process before, you really don't know exactly what to do. Rob, fortunately, was up to speed very fast, and his presentations to investors were quite polished and strong. And so he got up to speed very quickly in something that, quite frankly, was not a part of his experience and background.
That's great. So you just helped lever what he knew and made it a smoother path, it sounds like, for that fundraising effort.
That's
so
right.
Rob, what was the impetus for First Launch Capital Fund, and why did you accept our investment? I know we get to decide to invest who we want to invest in, but you also get to decide as the entrepreneur who to accept funding from.
Yeah, so I think a couple of different factors in there. One is First Launch represented a bridge between the angel investing that we were relying on, the angel investments, and the seed round that we're planning on doing later this year. We wanted to bring in some institutional capital that would, signal to the investment community that we have we've kind of achieved a new level in our sophistication, both in terms of the ability to go through due diligence as well as the sophistication in what we are doing within ThreatSketch proper. And so I think that was kind of one of the key elements. The other thing too is to bring the local entrepreneurial community further deeper into ThreatSketch. For all the reasons that Bill outlined earlier, I'm a proponent of, let's build something here in our community that really rocks and that can, be an example for others and hopefully be a home run in the industry as well.
Well, I can say we're counting on a home run.
I'm swinging for the fences.
No, you are, and we appreciate that. So, Bill, when First Launch made, as part of the investment committee for First Launch, we made the decision to invest in ThreatSketch because of their strong team, advisory board, and of course their business model. As an investor, what are your top considerations when you make a new investment, and how can you advise entrepreneurs to think about what it is they need to think about first and foremost as they start raising capital, like you helped Rob with?
Yeah, and these comments are really directed at more of a startup or early stage as opposed to an investment in an established company. Some of these are the same regardless of size, but others are really specific and more important for younger companies.
Right.
Obviously, the most important thing with a startup or early stage company is to have a strong team. If somebody's done it before, you hear the overused word serial entrepreneur. That's always a positive because there's a lot that you don't know unless you've been down the road. So a strong team, you've done it before. That team has to run 150%. I mean, it really is a young person's game because there are a lot of long days. You're on call 24/7. You've got to wear multiple hats. There are no silos. Titles are fairly meaningless in these things. You are the chief cook and bottle washer in these companies. You need to be a self-starter. You need to hit the ground running every day and to be able to motivate yourself. And highly motivated people are really key. So absolutely, biggest consideration in early stage investing is the team. I look for a big market. There's a big market that even a little piece of it could produce an attractive business. Typically not a commodity, however. Something that's value added, clearly does not compete on price would be very important. I like to see a business have multiple exit opportunities. It's very easy to put money into companies. It's very difficult to get money out of companies, particularly in the private market. There is no stock market to sell this into unless the company grows to that. I like a business model that requires minimal capital to succeed. It's not that there are not businesses that require ongoing heavy capital spending, but the ones that don't require that are a lot easier. And easy is probably the wrong word to use because it's all very challenging. But those are easier businesses to grow over time. And obviously the ability to attract future capital. The money that First Launch or anybody puts in a young company like ThreatSketch will not be the last. And so you want to make sure that that company is positioned and has a plan that can attract capital in the future. So if you look at ThreatSketch, look at the checklist. Look for a strong team. Well, Rob and Nathan, the two founders of the company, they've been at this. They're all over this. They've been doing it for a long time. Check the box. Big market. That's the second thing I mentioned. Well, the damages to the global economy from cybercrime, lost productivity, et cetera, next year is projected to be upwards to $6 trillion. That's a big, big number. And so we're chasing that globally with about $160 billion of spending on cybersecurity. If you want a big market, that's a big market. Check the box. You talk about multiple exit opportunities. Well, ThreatSketch really operates in two different markets. One is business analytics. The second is cybersecurity. Those are two of the most active markets in terms of exits for venture-backed companies. So check the box there. A business model that requires minimal capital. Well, this is a software as a service or a SaaS business model that basically once you get it set up and running, it scales with very little capital. That's why software companies in general are highly valued by the marketplace. Because once they achieve traction, once they start growing, there's very little capital that's required to grow those businesses, relatively speaking. And then obviously the ability to attract future capital. Last year, cybersecurity and data privacy companies attracted $10 billion worth of funding from the venture capital community. There were 815 reported deals last year, and there were many, many more that don't get reported, that don't add to that number. That is a huge market as far as venture capital funding goes. So check the box there. So this company kind of fit all the boxes that I, as an investor, would be looking for.
Thanks, Bill. And that's exactly why we invested in ThreatSketch as well, because you do check the boxes. And back to your point about Avid Exchange, when we made that investment as the Piedmont Angel Network, Fund 1, they checked those boxes as well. We didn't have all of the reporting, of funds and funding, but we knew that their space, even though it was at that time a very new space, that space was going to be covered and filled. And here we sit today looking at a multi-billion-dollar business.
Yes, and that speaks to another point, too, about excellent management. Abbott Exchange's business model didn't start out to be exactly what they are today. No. They had many pivots along the way, and that's why you look for a strong management team, someone that can recognize, well, this road is not quite as smooth as we thought it would be. We need to go in this direction, and that ultimately is where a lot of businesses that have come about and been very successful, household name technology companies, started out in a very different space from where they ended up.
Exactly, and that goes back to the old adage, jockey and horse. We invest in jockeys, which are the team, not the horse, which is the idea. So I'm going to overuse that. Sorry about that.
That's correct.
So, Bill, back to the fund and some of the goals that we have for the fund. Other than that most obvious goal of return to investor, return on investment, what are some of your key goals that you have, and why are you getting so involved with the fund? And what are the outcomes that you'd like to see from this fund in the next 5-10 years?
Well, obviously, financial return is of highest importance because we're not operating a charity, and we're not asking people to donate per se to economic development. The reason that this fund will be successful is because our number one goal by far is to focus on financial return. We would target for every dollar we receive in committed capital, hopefully returning somewhere north of 3 times over time. That's kind of to be expected with venture capital investments. They're highly risky, so you're looking for, high returns. Obviously, there's a huge amount of risk around that, but that's what we shoot for. When you look at the companies in our portfolio, obviously not all of them are going to hit those targets. Many won't achieve that individually. Some will fail. Perhaps many will fail. That's why spreading capital around a large number of companies is important. One company, 2 companies, 3 companies in the portfolio, if it hits, could take the whole portfolio over those goals individually. That's how you invest with venture capital. However, some of those companies that perhaps don't hit those large financial targets will create jobs. And from my perspective, I'm not looking for a target of X number of jobs per company. It doesn't matter. If a company is small and creates 5 to 10 jobs, that's wonderful. If it grows significantly larger and creates 50 to 100 jobs, that's even better. And if we get another home run at some point in the future and it employs more people, all the merrier. Because that is, to me, one of the most important things here is to create jobs that create intellectual capital for our region and enhances what they call the creative class here. We need to be keeping these people here. We need economic development. We need to make our region attractive to these type people. And, you look out at surveys and what people say they want, we have here in our region. We have green spaces. We have diversity. We have education. Our K through 12 public school system is one of the finest in the states. We've benefited from strong leadership from people like Alan Duncan over the years, who've brought a lot to our education. We need to develop stronger ties to our local colleges. We have tremendous engineering graduates coming out of North Carolina A&T. We've got UNCG. We've got High Point University, Elon, Wake Forest, Guilford, Greensboro. There is a wealth of intellectual capital here in young people. If you add it all up, there are tens of thousands of smart young people in our market. And we need to keep some of them here. We're not going to keep them all here, but we need to keep some of them here. And I believe that students with great ideas, if they feel those ideas could be funded, will put down roots here. And it's not something that happens overnight. This is a generational challenge. And I've heard, people ask me, they say, First Launch Capital, our mission is to provide the first round of capital in anywhere from, say, $25,000 to $150,000. Well, can't anybody access that kind of capital from friends and family and credit sources? And the short answer to that is no, they can't. Sometimes that is the only thing standing in between a good idea and a business that meets all of our criteria and someone moving away and taking a job in another region. And we want to make sure that people are aware of what we're doing here, and that there are these resources that are available to our young entrepreneurs and entrepreneurs in general to stay and make their home in the region. We have in our region, we got beaten down so severely economically. We have been spending a lot of time in our local communities simply just getting our heads back above water and trying to rebuild the jobs that were lost and all that economic carnage that happened. And sometimes that creates silos. And we've got to break down those silos. We've got to share resources, both in terms of capital as well as knowledge. There's no place in the new economy for provincialism. We've got to work together and share our strengths and basically mitigate our weaknesses. So I'm excited that the fund is focused on the region, because that is what we need to do to be competitive in the new economy. People will relocate to our region and will choose to live in our community, and they might live in Winston, work in Greensboro, work in Winston, High Point, Burlington, all these communities. We need to support the best and the brightest and the good ideas to start building this knowledge economy from the ground up.
Bill, I couldn't agree with you more. So thank you. Thank you. So as a quick reminder, as we close, First Launch Capital Fund does invest in companies in the 12-county Piedmont Triad region. And if you don't currently live here, we'd love to have you relocate here with an investment from this fund. We do more than just invest. We really do support companies and help them navigate this early stage process of starting and building and growing a business. So I'm going to thank Bill and Rob for joining us today and being a part of Impact the Borough podcast. So Rob, I'm going to invite our audience to learn more about ThreatSketch by visiting your website. It's www.threatsketch.com. Surprise, surprise. I'm glad you got that URL. And if you need help with quantifying your cyber risk or solving cybersecurity as an investment problem, you can reach out to Rob at rob@threatsketch.com. So thanks again, Rob, for being with us.
Thank you.
And I want to thank Bill, our board member at First Launch Capital Fund. We, as the fund, encourage folks to learn more about us by visiting our website, firstlaunchcapital.com. And if you know a company or you have a company that fits our investment criteria or would like to move to our region, which, as Bill has reminded us often today, it really does have what people say they want in a community, please reach out to me. And my email is lafstec@firstlaunchcapital.com. So thank you again all for your time, and Rob and Bill, and I hope everybody has a lovely afternoon.
Thank you. Go enjoy some of this good Piedmont Triad weather.
Yes,
Absolutely.
Definitely.
This podcast is brought to you by Truliant Federal Credit Union, a modern, mission-driven financial institution focused on the needs of its members, the businesses it serves, and our community. With 5 locations in Guilford County, including a dedicated commercial lending office at Friendly Center and a highly rated mobile banking app, Truliant makes it their business to help you grow yours. Visit Truliant.org for more information. You can find all of our episodes on YouTube thanks to our video sponsor, North State. Impact the Borough is recorded at Press Play Studios. Producers are Brody Cohen-Glaze and Holly West. You can follow us on Instagram, Twitter, and Facebook at GSO Chamber. See you next time.